What is money? It's more than cash or numbers in a bank. Money is a tool, a system of trust that lets us trade value. Over centuries, it's evolved from bartering to digital currency. Understanding money and finance is essential because it shapes our lives and the world around us. So, how does all this money move around the planet? Imagine a massive interconnected network of financial highways. This network is the global financial system. It's made up of banks, stock markets, investment firms, and other institutions that facilitate the flow of trillions of dollars every single day. This system connects savers who have extra money with borrowers who need it. It allows a company in Japan to raise money from investors in the United States, or a family in Germany to invest in a growing business in India. It's a complex web that operates 24/7. At the heart of this global system are the major financial centers. You've probably heard of them: Wall Street in New York, the City of London, Tokyo, and Hong Kong. These cities are the command centers of global finance. They're home to the largest stock exchanges, biggest banks, and most influential financial institutions. The decisions made in these hubs can have ripple effects that are felt in every corner of the world. A change in interest rates by the United States Federal Reserve, for example, can affect borrowing costs for a small business owner in Brazil. This essay is your map to navigating this global financial superhighway. We're going to break down how it all works piece by piece. We'll start by exploring the big markets like Wall Street and understand their immense influence. Then, we will dive into the different ways people trade and invest their money. We'll look at traditional stocks, explore exchange-traded funds, and demystify the massive world of foreign currency trading, also known as Forex. We will also venture into the new and exciting frontier of cryptocurrencies like Bitcoin. Our goal is to make these complex topics easy to understand. You don't need a degree in economics to grasp these concepts. We will use simple language and real-world examples to show you how these financial tools work. More importantly, we'll explore how people and nations across the globe are using them to build wealth and secure their financial futures. By the end, you'll have a clear understanding of how money shapes our world and how you can make it work for you, no matter where you live. Wall Street isn't just a street in New York, it's the symbol and nerve center of global finance. Home to the New York Stock Exchange and NASDAQ, its daily activity sets the tone for markets worldwide. The decisions made here ripple across the globe, shaping economies, companies, and the lives of millions. Now let's cross the Atlantic Ocean to another giant of global finance, the City of London. Often just called the City, this 1 square mile district within London has been a center for trade and finance for centuries. While Wall Street is the king of stocks, London is the undisputed champion of the foreign exchange or Forex market. It is the world's biggest hub for currency trading. This is where banks, corporations, and investors come to trade pounds for euros, yen for dollars, and every other currency combination imaginable. London dominates this space. London's unique position comes from its history and its geography. Its time zone is a massive advantage. Its trading day overlaps with Asia in the morning and the Americas in the afternoon. This allows it to act as a financial bridge connecting the East and the West. For a few hours every day, traders in London can do business with both Tokyo and New York simultaneously. This makes it the perfect place for international banks and financial institutions to set up their European headquarters, creating a dense, powerful ecosystem of financial expertise that is hard to replicate. The London Stock Exchange is another key player, though it operates differently from its New York counterparts. The LSE is incredibly international. It lists more foreign companies than any other major exchange in the world. This makes it a critical source of capital for businesses from emerging markets in Africa, the Middle East, and Eastern Europe. A mining company from Kazakhstan or a tech startup from Nigeria might choose to list in London to gain access to a deep pool of global investors. This cements London's role as a truly global financial crossroads. Despite events like Brexit, London remains a titan. Its influence extends far beyond currency and stocks. It is a leading center for international banking, insurance, think of Lloyd's of London, and a host of other specialized financial services. The decisions made in the city's glass towers influence global insurance premiums, shape international lending standards, and manage a significant portion of the world's wealth. London's deep historical roots and its ability to adapt keep it firmly positioned as a central pillar of the global financial system, working in tandem with Wall Street to keep the world's money moving. As the sun sets on London, the financial world turns to Asia's powerhouses, Tokyo and Hong Kong. Tokyo anchors global finance with stability and the mighty yen. Hong Kong, a gateway to China, connects East and West, channeling trillions through its markets. Together they form a vital Asian bloc shaping the world economy. A stock is a small piece of ownership in a company. When you buy a share, you become a part owner, sharing in its successes and risks. Companies sell stocks to raise money to grow. Investors buy shares hoping the company will succeed. Stocks offer potential rewards but also come with risks. That's the trade-off of investing. You own a piece of a company, so what makes its price change? It's all about supply and demand. If more people want to buy a stock than sell it, the price rises. If more want to sell, the price falls. This is the ultimate popularity contest, with buyers and sellers constantly pushing prices up or down. What drives these decisions? Expectations about the company's future. Good news, like record profits or a breakthrough product, makes investors want in, driving prices higher. Bad news, like recalls or poor earnings, spark selling, sending prices down. It's not just company news. Big economic forces, interest rates, inflation, global events can move the whole market. A strong economy lifts most stocks. A recession drags them down. That's why stock prices are so volatile. They reflect the hopes and fears of millions of investors. Imagine a pharmaceutical company's stock soaring after a successful drug trial, or a car company's shares dropping after a massive recall. Every headline, every data point feeds into this ongoing tug-of-war. In the end, stock prices are a real-time snapshot of collective investor sentiment. That's the market in action, dynamic, unpredictable, and always moving. Picking individual stocks is risky and time-consuming. What if you could own hundreds at once? That's what ETFs, exchange-traded funds, offer. An ETF is a basket of investments, often stocks or bonds. Buy one share, and you own a slice of everything inside. The main benefit? Instant diversification. If one company stumbles, others in the basket can offset the loss. Want to invest in tech? Buy a tech ETF and own pieces of Apple, Google, Microsoft, and more. Many ETFs track entire indexes like the S&P 500. One share gives you exposure to America's 500 biggest companies. It's a simple, low-cost way to bet on the overall market, not just one company. ETFs trade like stocks, so you can buy and sell them easily. There are ETFs for nearly every strategy: global markets, specific sectors, even emerging economies. They've made investing accessible, affordable, and less risky for millions. For beginners, ETFs are a smart way to start building a diversified portfolio. With ETFs, you're investing in the world, not just a single stock. Why invest at all? To grow your wealth and outpace inflation. Inflation erodes your savings value over time. If your money grows slower than prices rise, you're losing ground. Stocks and ETFs have historically beaten inflation, helping your money work for you. The secret weapon? Compound growth, earning returns on your returns year after year. Even small regular investments can snowball into significant wealth over time. People worldwide use investing to reach big goals: buying a home, funding education, or securing retirement. Investing turns you from a spender into an owner, building assets for your future. It's not about chasing hot tips. It's about steady, disciplined investing in a diversified portfolio. The key is consistency and patience, letting time and compounding do the heavy lifting. This approach has helped millions achieve financial independence. Start early, stay consistent, and let your investments grow. Meet Forex, the world's largest financial market, trading over $7 trillion every day. Unlike the stock market, Forex never sleeps. It runs 24 hours a day, 5 days a week, across global financial centers. What's traded? Money itself. Forex is about exchanging one currency for another, always in pairs like EUR, USD, or GBP, JPY. Every time you travel and swap currencies, you're part of this market. Forex is decentralized, no single exchange, It's a global network of banks, institutions, and traders, all connected electronically. Major banks are the biggest players, but corporations and individuals participate too. Exchange rates are set by this constant worldwide negotiation. International trade drives much of the action. Companies need to convert currencies for business, like Toyota turning US dollars into yen. Investment firms move money across borders, seeking better returns and exchanging currencies as they go. This non-stop demand for currency creates massive liquidity and makes Forex the backbone of global finance. The market size and speed are unmatched. Every global transaction from trade to tourism relies on Forex. It's the invisible engine powering the world economy. That's why Forex matters, even if you never trade a single dollar. Let's break down how Forex trading works. Currencies are always traded in pairs, like EUR/USD. The first is the base currency, the second is the quote. The price tells you how much of the quote currency you need to buy 1 unit of the base. If you think the euro will rise against the dollar, you buy EUR/USD. If you think it'll fall, you sell. You can profit whether prices go up or down. Price changes are measured in pips, tiny movements, usually the 4th decimal place. Because these moves are small, traders use leverage, controlling large positions with little capital. Leverage magnifies both gains and losses. A small move against you can wipe out your investment. That's why risk management is crucial. Tools like stop-loss orders help limit losses. Successful traders focus on protecting their capital, not just chasing profits. Forex is double-edged sword, big potential, big risk. Understanding the mechanics and the dangers is essential before diving in. Don't let leverage turn a small mistake into a big loss. In Forex, discipline and caution are your best friends. Even if you never trade, Forex shapes your daily life. Exchange rates affect the price of imported goods. Stronger home currency means cheaper imports, weaker means pricier ones. Planning a trip abroad? The exchange rate determines how far your money goes. A strong currency makes travel and shopping overseas more affordable. For businesses, currency swings can mean the difference between profit and loss. Exporters benefit from a weaker currency, importers prefer a stronger one. Central banks watch Forex closely, sometimes intervening to influence their currency's value. These moves impact everything from inflation to interest rates. The ripple effects touch jobs, prices, and economic growth worldwide. Forex is the hidden force behind global commerce and your everyday expenses. It's proof that the world's biggest market affects us all, whether we realize it or not. Just when you thought you understood finance, cryptocurrencies arrived, led by Bitcoin, the original digital currency. Unlike dollars or yen, crypto isn't controlled by banks or governments. It's decentralized, powered by blockchain, a public ledger everyone can see, but no one can alter. Born from the 2008 financial crisis, crypto challenges our idea of money and the future of finance. To buy or sell crypto, most start with centralized exchanges like Coinbase or Binance. Think of them as stock brokerages for digital assets. After buying, you store your crypto in a wallet, either on the exchange, custodial, or in your own wallet, non-custodial, for more control. Cold wallets, like hardware devices, keep your keys offline for maximum security. Crypto markets are open 24/7 and highly volatile. Trading isn't for the faint of heart. Cryptocurrency offers the chance for incredible gains but comes with high risks. Volatility, regulatory uncertainty, and security threats can lead to major losses. Only invest what you can afford to lose. Education and caution are essential. The digital frontier is exciting, navigate it wisely. No matter where you live, the desire for financial security is universal. Financial independence means having enough income from investments to cover your expenses, freeing you to live on your own terms. It starts with saving, spending less than you earn. Then, invest those savings to grow your wealth. Anyone, anywhere can build wealth, one investment at a time. Investing strategies vary worldwide, shaped by local economies and opportunities. In developed markets, people often invest in index funds for steady long-term growth. In emerging markets, investors may seek higher returns and higher risks in local stocks. Real estate and diversification across assets and geographies are key to building wealth in our interconnected world. The digital age has revolutionized wealth building. Today, anyone with a smartphone can invest globally, access low-cost tools, and learn from online resources. From index funds to cryptocurrency, financial opportunities are more accessible than ever, no matter where you live. The power to grow wealth is now in your hands. We've explored the world of finance, from stocks and ETFs to Forex and crypto. Today, anyone can access these tools to build wealth and secure their future. Understand the basics, invest consistently, and let time and compound growth work for you. This is your blueprint for financial success. The global financial system can seem intimidating, but at its heart, it's built by people, for people. By learning its language, you empower yourself to participate in one of the greatest wealth creation engines ever built. The journey begins with a single step. Start small, stay curious, and take control of your financial future today.